Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein of Linn & Associates with your financial market update. And this is for Monday, the 15th of May, 2017. We're just approaching 3:40 p.m. Central Daylight Time. So while the markets have settled higher, they're still trading, although in very, very light volume. Same in the metal markets. So the events of the weekend, well, we all know what they were. North Korea fired a missile that, believe it or not, went over 1,200 miles up. That's pretty impressive. Yes, it only flew 500 or 400 and some odd miles, but that's because they shot it up for a drop almost straight back down. Had they put on a trajectory, some say it could have gone 2,500 to 3,500 miles. I've read all kinds of reports. So that's going to be taken up tomorrow at the United Nations. Who knows where they're going? All they ever have are meetings, and nothing seems to curtail them. Cut off their oil, cut off their money, get China to say no more trade with them, and guess what happens? You probably rein them in. Can they do it? If I'm Russia, I'm concerned. That missile didn't land that far off their coast. I read one report that said it was 60 miles off their coast. What if it had missed and hit a city? Whoa. All right. Dollar index down. We've got most of the currencies up. But I watched all day. Nobody was buying the yen, and I think that's very important. It was still down, so all that fear didn't drive people to that. And the stock market still likes what it's seeing. I think you can see the churning that's going in here on a weekly chart. It's just back and forth between 20,311 and twice you've hit 21,010 on different weeks. Are we going to get up and through it and stay over it? That becomes the big question. As we take a look at an area chart of closes, this is how you look. Now, today's settlement price will not exceed 20,954, but you're certainly in an uptrend in the market. When I put on just a bar chart of daily activity, here's that sideways action that you have in the market. And the pattern is one where you have recently a lower low and a higher high. Folks, you're just not trending. You certainly have upside bias, and the key number the market is looking at is the 18-day average. As the market pulls back to it, and it's finding support at those numbers. What will do damage to the market is if you take out 20,760 and not 21,010, you will end up with lower highs and then lower lows. You're in a downtrend at that point. So we can start pinpointing a number that should not be hit. I am not saying it will be hit. That's what it shouldn't be hit as long as the market stays in an uptrend. Should it rally, you can see how the Bollinger Bands are now wrapping their arms like this around the market. So you're going to have your resistance number dropping down, your support number coming up, and that's because you're going sideways, and that's part of the function of that. The slow stochastics are not in sync with price going up. They are just sort of drifting right here, staying in actually an overbought condition. I define that if either number is over 70 and the D line, which is the blue line, is over that number, it's the slower moving number, that you're not in anything but an overbought condition. I'll define it as that. So we'll see if this market is just a Monday rally, a Tuesday break. I don't know what you're going to get. I don't say that about the NASDAQ. I've called this the poster child because it's got the embedded reading that hasn't begun to turn down. It has a clear pattern of higher lows, higher highs over the 18-day average. Remember the theory of the black bands, which are Bollinger Bands. They're an algorithm designed to keep the market trading within them 95% of the time. So the way to look at it is the first challenge of it is into a resistance area. The first challenge on the low side is into a support zone. This move up came because the market went sideways, and when it broke out and stayed out of that, it also embedded, and that carried this whole position to the upside. That's as a technician looking at the market. When looking at the E-mini S&P, it's more like the Dow. It's got a problem. It's overbought. It's got a pattern of a higher high and a lower low. Here too, if you were to take out 2379 and don't take out 2400.75, believe me, that's from it's not far away from where you're at up here. Did I say 2400? That's not the right high. The high is 2403.75. That number was covered. You'd have the makings of a downtrend into potentially the lower Bollinger Band, so not very far. That's the important thing. The Bollinger Bands are narrowing in because of all this sideways action and saying you're getting into a range-bound market that doesn't have much traveling in it. In the Russell, you got oversold. You've bounced back to the resistance point of the 18-day average. Not the first time we've done that. We've done it a few times recently. To negate the downtrend, you got to take out 1403.30. Unfortunately, because you got lower lows, you can't enter an uptrend. An uptrend being defined as higher lows and higher highs. You can certainly switch the momentum to the upside, and the market's attempting that, but you got to get that red line over the blue line pointing like that, just the way it did here. And then I'll argue that the momentum has turned. In the VIX, the market had an outside day up. So if you want to trap the players, you take out today's lows. If you do that and you close lower on the day, we'll call that a bull trap, and down you go. Momentum is pointing up. Resistance back at the 18-day average. You missed it by 2 ticks today. If you can clear that, then 1186 is your next number. Now, the higher this goes, in theory, the lower stock indices, maybe with the exception of that poster child, NASDAQ typically go. Bond market lost its embedded reading. It's having an outside day down. You don't want today's highs taken out. If they're taken out, there's no reason to hang around being short. That's what my work would say. In TLT, you've got a lower low, a higher high. You have upside momentum, no trend, no bias to the upside because you're under the 18-day average. Pretty much a nothing market. In the 10-year note, you went up to the 18-day average both yesterday and today, and you're failing against it. You can't get anything going. So did this upswing waste its power on that? I can't answer that for you yet. I can tell you the trend has got the swing line up, but you got to close over that 18-day average, and it doesn't appear you're going to do it. In the dollar index, clearly a lower low, a higher high, so we know we don't have a swing line trend. Bias is turned, or momentum is the better word. Momentum is turned to the downside, and the bias is to the downside. So you got several elements here still pointing down, but you're not trending. You seem to be drifting back and forth in these narrowing Bollinger Bands. In the euro currency, a big rally today, but again, a higher high, lower low. Not a trend. You held the 18-day average on 3 tests of it, and you bounced to the upside. Now the key is, if you're going to get a downtrend going, somewhere here you got to fail and not take out that high. And notice that that high is also the Bollinger Band high. Interesting zone if you rally tomorrow. British pound, I think the bears will be waiting for this market if you take out today's lows. You've already got lower highs, lower lows. I think they'd gather steam if you take that out, but, a lot of buts here. You take out today's lows and then get over today's highs, what could happen is if you don't take out this low, you could swing around and then go back into a minor uptrend. Notice how the Bollinger Bands have gone sideways against the 18-day average, which you've hit 3 times now. So momentum down. Market doesn't really have a trend per se that I can say where everything is together. Japanese yen still in the bear camp, still with the embedded reading, lower highs, lower lows, still looks bearish to me. Crude oil, higher lows, higher highs. My guess is this momentum is picked up, and as I said, with an OPEC meeting on the 25th coming, and they keep releasing all kinds of press clips that now they've got Russia on board, that the Saudis are on board, that even the EIA had a report today where things look as though it's getting a bit better in terms of balancing, and the monies that they get in this coming year, fiscal year, versus last year will be more for OPEC members, even with their production cuts, because prices have come up into the, while we're at 48, they're in the 50s. And that's better than when prices were $35 to $45 for them in the Brent. So things are looking better. Why would you want to be short if they're saying they're going into the March time frame? And that seems to be where the market's at. But what would derail all this is taking out 47.35 on the WTI. That would make the chart look fairly ugly. Gasoline looking better and better. And do you really want to be short in front of the holiday season now? It's up to you, but as I mentioned, this is a hard market to want to be short when you know you're going to get gasoline demand that picks up at this point. This market is targeting, if it can rally, the 167 level, the upper Bollinger Band. The USO ETF fund, also bullish. Higher lows, higher highs. So I've added this to you because sometimes the traders come in this ahead of the futures. Then this fund has to buy the futures contracts so that they all get in line together. When you're looking at nat gas, pretty interesting day. You made a trading peak up here. You have a lower low, higher high. You had 2 days where you're trying to stay over that upper Bollinger Band in an overbought condition. Probably correction time, but you have a crossover where the 18-day average is over the 100. So I would think that anything into this 325 area probably sees a heck of a lot of support show up in it. Want to remind you, we cover at our company all these different categories, and we have people writing about it throughout the day and evening. Last night, if you were looking, you're getting our grain reports and everything. It's not a matter of, gee, come Monday morning, I'll open up and see what I've got. You get all this flowing from people that are fundamental traders, that are people that are good chartists. You see what they're doing, and you get to pick what you'd want. How do you get it? It's pretty simple. If you haven't tried it, we'd like to give you a 2 to 4 week trial. That's typically, I try to stretch it out for you. Call us. Go to our website. You'll see a carousel of free offers. Choose Linn Research. You can click on the icon right here or under us on many websites. It'll say click here for Ira's free offers. Choose that one, and then you can choose the categories you want. I'm Ira. You have a good day, and I'll see you all tomorrow.